A choppy Thursday. What's going on, guys? It's Ricky with Tactical Solutions here with a super quick market update. One of the things that I quickly want to highlight is overall NASDAQ market saw a sharp decline shortly after the market opened. During the extended hours and even during the pre-market session hours, we were showing signs of an uptrend. But for what, right? Trump announced a series of new tariffs that were supposed to collect billions of dollars, and the economy was acting like it wasn't businesses and consumers that are going to be paying that tax. So, what quickly acted as a bull trap shortly caused the market to retrace. Now, don't get me wrong, market overall in the larger time frames are still showing to be incredibly bullish. I need to make sure that I highlight that. But we saw a quick retracement, and of course, right into the close, just like the markets always like to do, they lead with a rally because why not when the markets are this irrational? The stock that I quickly want to highlight is Crocs. Crocs reported earnings before the market opened today, causing the stock at the end of the day to sell off 29%. Nearly one third of the value of the stock was wiped out in a matter of hours. You might be wondering, oh, this stock must have reported terrible earnings. Nope, not the case. It actually beat earnings expectation for both EPS and revenue, something a lot of big tech companies couldn't even do themselves. But because this company has to do more with retail and consumer, there's an expectation that consumer spending is expected to drop in the quarters that follow. But wait, I thought economies were thriving. Why would a company forecast weak consumer spending? Because that is what the data is supporting. Remember, the stock market and these inflated and insane valuations are not a representation of how the average American is doing. Right now, the average American is not spending more money than what they were when, again, interest rates were a lot cheaper. Nonetheless, companies like this are the ones that pay the price. But of course, companies that are more tech-based can continue to inflate their perceived value because why not, right? We're in this AI bubble where, again, markets continue to pump for no given reason, but simply because there is great optimism that Trump is going to pull something out of his hat, causing markets to continue to rally. But I want to remind you that a lot of companies like this, especially on the retail side, are lowering their expectation, and Crocs anticipates a 9 to 11% revenue decline for Q3 of 2025 in comparison to analyst expectation. And solely because of that guidance, this is again where it can get very tricky, where it's not just important for a company to report better than expected earnings, because remember, the earnings are of the previous quarter that has already completed itself. So for Q2 of 2025, Crocs exceeded expectations. So that has satisfied investors. But remember, investors are not just looking at previous quarters, they want to see what is expected for up and coming quarters. So they can decide, do we want to stay invested, invest more, or if it looks lower than what is expected based off of guidance, then again, they can begin to cash out and take profits because again, the upside is no longer looking as favorable. And if we look at something like Crocs, Crocs hasn't been performing too well. This was actually a company that did very well during the post-pandemic rally when interest rates were super low and money was just dirt cheap. Crocs just went on this insane upswing from lows of $8 all the way to highs of $182 before crashing right back down to $45. So this is a constant theme with Crocs. It has its nice upticks, its nice downturns, nice upticks, nice downturns, nice upticks, and nice downturns. So the reason I'm talking about this is if you're asking, if you are looking for a stock that might be a good way to make money right now, then this definitely is not going to be it, right? Crocs looks like it's experiencing and expected to experience some more downturn in the up and coming future, right? Based off of its guidance for 2025. But if you can stomach these downturns and you like the upside and what it normally tends to do for a potential recovery, then maybe it's something that you can add to your watch list and follow up when it could actually meet your criteria. I just love talking about stocks like this that either gap up or sell off on the larger time frames that could present a potential either dip buy opportunity for those that see it as that, or a potential short opportunity for those companies that become insanely overvalued within a short period of time. One of those companies was NBIS. NBIS was a company that has recently pumped up. Again, just a complete pump and dump, driving the price up an additional 18% today. I took a small little trade on it just for fun. I don't even like talking about this because it's a complete pump and dump, but I shorted it on the retracement. But I closed it out fully. As you can see, my position is fully closed. I made $1,700, but not too important. AMD was a company that I was actually looking to short today, like I talked about in my video earlier today. But one of the mistakes that I made yesterday is that I entered a short position before confirmation. I didn't make that mistake today because with the stock, with the short that I took on HIMS, as I talked about it, HIMS was a stock that was consistently selling off. Direction was in my favor, and I made $2,600 on this trade alone, fully closing it out and locking in profits. And being completely honest, I closed out my trade a little bit early because from where I closed it, my LPP team actually got to see me trade this one live. If you ever want to watch me trade live, second link in the description down below. But with that being said, it dropped even more. But guess what? You don't need to be perfect to be profitable in this market, right? You just get in, get out, make your money, and you bounce. But I'm very happy to see that I did not take a trade on AMD, although it did show some signs of a reversal. This is a stock that, again, has been incredibly bullish for, again, just the recent time frame. And I knew that because it sold off, it was eager to recover. And anytime that I see that potential for a recovery, it just, again, the criteria is not there. And in simple terms, the trend, it was not in my favor. This was more of a bullish stock than it was bearish, and I wanted to respect that. 2 days ago, that would have been a different story when it was aggressively selling off. It found its support. It's trying to recover. We'll see how it follows in the days that come. So we'll see tomorrow what ends up presenting itself. I'm very excited for tomorrow's live trading session. If you guys want to tune on in, again, all you literally have to do is second link in the description down below. You can sign up and watch me trade live as soon as tomorrow. It's a one-time payment, lifetime access, and it's designed for complete beginners. So again, if you want to learn more about it, second link down below. And if not, again, we'll see you tomorrow at market open for our live session. Like always, let's make sure that we end the year on a green note. Take care, team.